And let's just roll it into our first panel of the day, ladies and gentlemen. Want to welcome on here Tom Zuber from Zuber Lawler. There he is. He's going to be the host of our first panel, ladies and gentlemen, and it's going to be on MSOs, right, Tom?
Indeed it is. Thank you, Brent. Really appreciate it. And great to be here with my friends at Benzinga. So thank you for having me. And we have a great panel today, and it is on the topic of MSOs. So first, I'd like to just introduce myself. I'm Tom Zuber. I'm the managing partner of Zuber Lawler. And we have 7 offices across the United States under God, and we have been in the cannabis space for over 15 years, back when California first went medicinal. That's where our headquarters is. And some of our friends became the pioneers of the cannabis industry. And so we were asked to do the higher stakes corporate, M&A, finance, IP, FDA, litigation work as it started arising in the industry. And so we became popular for doing that sort of work. We were named Cannabis Law Firm of the Year last year, and we represent a good number of the leading companies in the world in respect of their higher stakes matters, cannabis companies. We have an amazing panel here to discuss the growth of MSOs in the current environment. And I'm going to go ahead and make a brief introduction of each panelist and then ask you to just say a few words about yourself briefly. So let's start with Robert Beasley. He's the CEO of Cansortium. Robert, you want to say a few words about yourself and Cansortium?
Sure. Robert Beasley, a native of Florida. I probably, like your pathway, was a practicing attorney. Thankful to be semi-retired from that career and started this new one. But my involvement in the industry came from the regulatory format. I was participating in the legislative efforts and drafting of the rules in Florida when they first came out, which made me a natural shoe-in as a consultant to those first 5 licensees, and played that role for the first couple of licensees at that time. Then went out into other states and helped build up businesses in cannabis space, coming back home to Fluent when they asked me to come back in 2020.
Thank you, Robert. It's great to have you here, Robert, and excited to do this panel with you. Next, Kevin McLaughlin, Director of Cannabis over at Centri Business Consulting. Kevin, do you want to say a few words about yourself, sir?
Yeah, of course. As Tom noted, I'm a director at Centri, lead our cannabis practice. Centri is an accounting advisory firm. We provide financial reporting, risk advisory, valuation services. We don't do any audit or tax. Rather, we act as a liaison between management, legal, bankers, management, et cetera, for whatever need a company may have, whether it's a first-time audit, going public transaction, technical accounting, due diligence type services within the cannabis industry.
Thank you, Kevin. It's great to have you. Next, I have my friend Michael Mills, CEO over Body and Mind. Michael, do you want to say a few words about yourself and Body and Mind?
Yeah, hey Tom, thanks for letting us join the panel. Yeah, Body and Mind's been around for quite a while. We won one of the first cultivation manufacturing licenses in Nevada, which was one of the early states to go legal, and have since continued to expand into states as they've opened up. And we're now in California, Nevada, Ohio, Arkansas, and we're in the process of building out a vertical in Michigan. So really excited to share some of our experiences and discuss the cannabis industry with some of the other panelists here.
Michael, it's great to see you. Thank you. And finally, we have Gary Santo, CEO over Tilt. Gary, can you tell us a bit about yourself and Tilt?
Sure, Tom. Thanks, and happy to be on the panel today with our fellow colleagues. So Tilt is not your typical MSO. We focus more on B2B. I joined the firm back in July of 2020, really with a focus on growth, having come from another MSO and a background of working with a lot of different startup companies. So for us, certainly as we look across the landscape and where we see the cannabis industry going and the prominence of CPG, we're pretty excited to have rolled out a strategy that focuses on that, and the reception we've gotten so far has been fantastic. So we're probably a little smaller than some of the other MSOs out there, but we're definitely growing organically, and we're starting to look forward now to some of the more inorganic parts of the growing process. So excited to talk more about that.
Gary, it's great to have you. Thank you. So let's go ahead and start with an open question just to get the ball rolling here. What's driving the growth of MSOs today in today's environment? And that's an open question for the panel.
Yeah, I'm happy to take that. I think that what's really driving growth in this industry is the change in consumer attitude around cannabis and the legalization of cannabis. We've got we've got, if you look at a few different polls, roughly 70% of the population thinks that cannabis should be fully legalized. And what we're seeing is we're seeing a whole group of people who never would have tried cannabis or never would have made that part of their life because it was illegal, coming into the industry as new buyers, as repeat buyers. And as more and more states open, this opportunity continues to grow. So, it started very slowly, with the early states, Colorado, again, Nevada was one of the early ones. And it really feels like it's been accelerating. We're seeing ballot initiatives, we're seeing state initiatives, we're seeing federal initiatives. But really, when you pull back to, what is the growth? The growth is really, a lot more people being accepting of cannabis, enjoying cannabis, and bringing cannabis into their lives.
And I think I would add to that I completely agree with Michael's point that as you continue to open markets, you're getting a larger consumer base. But I also think you're seeing a maturing of the consumer base out there. I think at first it was the novelty of being able to buy cannabis legally that just caused people to rush in. And we're seeing a lot more discriminate buying now in the sense of what's the form factor, what's my use case. I think in medical markets, it makes sense because obviously you're either getting a prescription or you have a medical card. But even on the adult use side, I don't know that price and potency by itself is just the winning strategy anymore. It's certainly a key part of it, but we're certainly seeing we're very East Coast based, a lot more of, what are the products, what are the form factors and things like that. So it's what you sort of expect as a market matures and becomes sort of that specialty retail, industry.
Yeah, just to piggyback off of Michael and Gary, I think you're seeing a shift in consumer preference. A little more from the traditional form to now edibles and candy, and there's infused beverages where allows for different forms where you're able to have a little more diversity in the target market. And it's cannabis is here. It's mainstream where in the past maybe it was a little more taboo. It's mainstream. It's here, and it's there's certainly access that people have to it, and will only continue to grow from that standpoint.
I think that I think that the growth of footprint of the MSOs from an M&A perspective that we've seen, we talk about the industry being in a consolidation period right now, and it is, but it's an internal consolidation period. We do not yet see the outside players that you would expect to come into this market for regulatory reasons, obviously. But we're going through an internal consolidation period, and that really has to do with capital. These big MSOs, as you want to call them, they're all publicly traded, and now they're reaching that magic point where they're able to buy and do share deals, and their share value is substantial enough that they can come into a state where a smaller footprint, a local mom and pop has obtained their license. They've gotten off the ground. They've made good traction, good progress, but now they've reached that magic moment where they just need more capital to be competitive. And they're at that critical point where, do I borrow money or do I just sell? Have I gone far enough? And those MSOs are a very attractive alternative for that moment of time for those captive industries. And so what happens is they come in, they're able to provide a good share exchange and relieve that party of what they've done to date and allow them to cash out. And that's what we're seeing in the states as the MSOs expand their footprint.
Thank you, Robert. Yeah, that's very helpful and great points there. And Kevin, let's go back to you. In the context of, we're talking about new states, emerging states, what are some of the biggest challenges that you've seen from your perspective at Centri in terms of MSOs expanding into new states? Given, of course, federal prohibition, you can't put THC in the trunk of your car and ship it over to Ohio. So how are you seeing companies meet those challenges?
Yeah. As I noted earlier, we help companies with their accounting, due diligence, valuation type needs, and there's certainly challenges that MSOs have as they expand into new states and even existing states, for that matter. As the industry's really matured, there's been a wave of M&A activity, joint ventures, just generally consolidation, and unfortunately there's been deals that have been held up because of incomplete, inaccurate financial statements. I mean, we've had scenarios where we've parachuted into a deal that was waiting to be executed, and prior year audits needed to be completed and signed off on, before the acquirer would sign off and finalize the deal. So in that this scenario, management is unable to execute on the vision that's been set forth to the outside world because the company's stuck in the mud fighting through audits and due diligence and some of the back office accounting type items. And as the adult use market brings in more money and possibilities for even more expansion, being listed on a public exchange opens up just even more understanding of what accounting implications may have and whatnot. So management of these MSOs really have to prioritize accounting finance functions by resources, whether it's internal, external, some combination of companies that they're acquiring to ensure that they're aligned with market trends. Certainly takes time, money to kind of get up to speed with some of the financial reporting quality that's needed to get through an audit or some of the items that again can hold up a deal. So from our standpoint, those are certainly some of the challenges that we've seen where a deal gets put to the side or stalled or doesn't get done in a timely fashion after it's been announced. So if can't get through that part of the process, it's the difference between closing a deal or missing out, to be frank.
Agreed, Kevin. We've seen some similar issues from our perspective as a law firm. And on that note, Gary and Michael, I'd love to hear if you have thoughts on that from the MSO perspective, which I think is probably the best perspective here. But Robert, as a fellow attorney, have you seen what challenges have you seen in terms of growing your clients across state borders, and how have your clients addressed those challenges? If you have anything to add on that.
Well, it's now been almost 2 years since I've represented other clients. I've been sitting in the CEO seat for a year and plus some. And so when I was involved, it seems like 2 years was light years ago. The application status was where most of these states were. They were still trying to get in from an application point of view. And now it's more of an M&A status that's going on. And so that's the transition that I've noticed now as the CEO of this company, which is publicly traded. We are constantly being vetted and vetting others. Everyone's taking a peek right now. And so I think we stay under an NDA, it seems, throughout our year with one entity or another taking a look at each other. There's a lot of appetite for consolidation. And again, as the market continues to recognize these shares and these stocks and the value in this industry, in this sector, I think you'll see it happen more and more. It's going to end up with, a top 5, a top 6, a couple big players before we see the outside consolidation start to come in.
Thanks, Robert. Very good. And Gary, Michael, anything to add on that point in terms of challenges that you've seen? I imagine similar challenges, but any additional?
Yeah, I mean, one of the things I'd say is when you look at how a lot of these companies came to market in the first place, right? A lot were RTOs or SPACs. And I think one of the issues you tend to have when you come to market that way is there's a certain discipline that goes into going through a true IPO process. You have the marketing, you have the auditing, you have your governance and your risk all lined up because it has to withstand the bright line of that marketing to figure out where the investor demand is and where the market values you. With a lot of these SPACs and the RTOs, that really doesn't happen. It happens at a certain level. There's diligence, don't get me wrong, but it's not at the level that you would normally do. So you have companies going public who maybe don't have the systems and the processes. So they're figuring it out as they go. They're in an industry where you can't really have centralized anything because if you're in 18 states, you have to have basically 18 independent businesses. And now as they're starting to go through diligencing other companies, I think you're starting to see the evolution where now these folks are becoming true operators and starting to look at the typical metrics. So it takes a little longer, but honestly, what I've started to notice is, the systems are starting to come online a little more and the vernacular is becoming online. And no more do you have to hear this, oh, well, it's cannabis, so you shouldn't expect things like budgets, or anything like that, which is great to hear.
Yeah. Michael, let's go to you for the next question, sir. So what are some of, staying on the topic of expanding into new states, do you prefer to, does Body and Mind prefer to acquire, or do you prefer to start de novo and go through the whole process of applying for a license and all the things that go into that, or both?
Tom, we've done both, and we sort of built the company on winning licenses as states were opening, and I think we have a good track record. We don't win them all, but we certainly had some good success in Ohio, in Arkansas, in Nevada, in Illinois, and that, you know, in a perfect world, I guess if you were to explain it to someone who's not involved in this industry, it's if you're thinking about buying a house and you've got the option of buying a custom house that is just what you want, you get to build it the way you want and you get to run it the way you want. Well, that's kind of like buying a license, and it's a long process, and it doesn't tend to cost as much money. In fact, it costs a fraction of the cost of buying that house that's complete, but you really get your own team. You get to really design it from, whether it's a grow or a manufacturing facility or a dispensary, you get to do that from scratch. Whereas if you're looking at potentially buying an asset or an acquisition, there's a whole myriad of things. And I think Kevin, you know, touched on some of the challenges. Very often, if you're looking at buying an asset, there's a number of people in that group that own that asset, and maybe some of them want to sell, but maybe some of them don't want to sell. So you run into sometimes some delays and some issues as far as whether that group really does want to sell their asset or not. Obviously, when you're buying something that's been built up by a different group, there's cultural fits that have to make sense. And then as you delve into due diligence, you get involved with all the things that Kevin had discussed, which were audits and bookkeeping and how that company's been run. So there's great things about winning licenses. They're getting harder and harder to win. But we feel that that's probably one of the best ways to create shareholder value, and we've been successful at it. But one of the fantastic things about acquisitions is you can add to your top line and your bottom line fairly quickly, as long as you can move through that process. And we look at acquisitions almost every day. There's a lot that don't make sense. We backed off on really looking at any of them over some periods of time because the cannabis market has gone up and down, and there was a lot of overpayment in the past, and we stayed away from that. So we're very value conscious when we're looking at these. But we think that both ways are fantastic ways to build the business.
Thank you, Michael. And Gary and Robert, what about you? Do you prefer? Do you have a preference one way or the other? Has that evolved over time? Robert, I know you've only been in the CEO chair for a year, but Gary, has that evolved over time? Your preference for acquisition versus applying for licenses de novo?
Yeah, I mean, look, I like that you can control your own destiny when you apply for a license. But now that the market's maturing, there is the question about time to market, right? So how long will it take you to activate that? At the same time, if you want to do the M&A, I completely agree, with Mike's comment that you can very quickly add to your top line and bottom line. You could also very quickly implode your top line and bottom line if you don't have a good integration team. And, if you're basically doing this on the notion that by magically buying a company that's losing money, it suddenly starts making money. So, I think if you've got a good team and you know what it is you're trying to do and what you expect out of that asset, there are some interesting deals to be done. It does feel like pricing has gotten a lot more rational, and the structure of the deals have gotten a lot more favorable to, something that looks good on the surface and you can only do so much diligence, but, a lot of the economics are really to the sellers on the back end. And I think those things are important. So for us, it's a case-by-case basis. I mean, look at the deal we did with the Shinnecock Nation. That was a partnership. We're going to build something and involve the license, but it was an interesting way to get into New York, short money on our side, and every dollar we invest, we're building our own custom facility, but we can do it on an accelerated timetable, just given the logistics. So, I think you just have to be opportunistic, which I know it's kind of like business 101, I know. But it is a little different. Before, I think it was a land grab. Now I think it's more about what is your intent and what is your overall strategy.
Agreed. Robert, anything to add there?
I think I agree. I agree completely with Gary, and it's a case by case basis. The entry cost of being a successful applicant is much less, but the time to first revenue is much greater. So what you really have to do, and I think Kevin mentioned this, you have to really look under the hood very, very strongly and very, very diligently, because these operations, most of them were started up on a shoestring. There's not good internal controls in most of these companies. What you see on the outside is sometimes not what you get on the inside. And so there are opportunities out there to grow in an exponential format as opposed to starting from scratch, but you have to really pick through them, and they're there still. But skill level and industry-wide depth of knowledge just wasn't there in the early days. And the early days now were just a few years ago. And so when some of these startups occurred, many of them took off in the wrong direction. And sometimes you look at the pitch that they're selling and realize you're just going to have to start over anyway. And so it's really just a matter of your own due diligence.
Thank you, Robert. Gary, let's come back to you. Debt or equity? Which do you prefer in terms of financing Tilt's growth, and why?
So, I mean, look, I'm a fixed income guy. I spent 16 years floating asset-backed securities, so I am always a fan of debt over equity. I've been excited by really how the debt markets have stepped in, and really, if you think about it, debt investors in the current environment could really be turning up the heat on a lot of these shops, because the opportunity for any of the MSOs or any of the players in the space to go out and raise equity right now, you're doing it at a tremendous discount. But instead, they've actually started to introduce rational pricing. I get that it's still higher than comparable industries where you might be borrowing in the kind of security packages you're putting forth. But if you've got cash flow from operations, which we're fortunate that we do, and you can manage that debt service cost, I always prefer debt over equity so we don't have to dilute the shareholders.
Very good. Any other thoughts from the panel on that, debt or equity?
Well, I can tell you our May raise was both a equity and a debt scenario, and we just did a little touch of both, if you would, to supplement with the equity. The availability and cost of money, of capital, now that there's good U.S. support, is dropping dramatically, and so debt is more available and cheaper, and so that makes the consideration a little bit more of a task to decide on. But it's about balance. I think that we will always maintain it fluent a little bit of both.
Thanks, Robert. One of my favorite topics is actually talking about post-acquisition integration, because it's well and good, all the excitement of an acquisition and the big press release, but then you've actually got to make things work. You've got to combine sometimes two very different companies, and that can be difficult. And we also, in addition to doing those sorts of deals, we sort of clean up those deals after the fact when we weren't involved in putting those deals together in the first place. And so it is a favorite topic of mine, and I'd love to hear thoughts from the panel. And this is an open question for the panel. In terms of post-acquisition challenges, what are some of the things you've seen go wrong in terms of integration of companies?
I'll jump in here, Tom. I think the biggest thing, and this is a huge part of due diligence, is the biggest thing that there absolutely has to be a cultural fit. And sometimes that's not as easy to assess as the numbers, and whether their accounting's been done properly, and all the due diligence that you can do from a financial standpoint. There needs to be a fit, because you're really you join these two companies together. I think that when you've been operating as really a startup and then grown and grown and grown, you have a very definite culture in that company, and that's one of the first things that we take a look at before we really go down a much more detailed path. Obviously you're going to look at the top and bottom line numbers and dig into the company, but we take a pretty good look at how whether the culture is going to fit with all our culture. And I think from the standpoint of what's sort of gone wrong after the fact, I think everyone's probably got some horror stories out there. There's all kinds of things that can go wrong, and sometimes as I mentioned before, sometimes when you're looking at an acquisition, it was, and I'll use an example of a manufacturing facility. 5 people went in together. They thought that they were going to make the best shatter in the entire world. And one person, is a 70% owner, and then there's one person who's a 4% owner, but somehow they didn't really structure their deal properly. And this is, Tom, I'm sure where you help smart people who come to you at the beginning of the game with an exit in mind. And all of a sudden that 4% partner is potentially holding up an entire deal that everyone else thought was really almost complete. So I think that that's one of the things that that you see in this industry that's kind of specific to this industry, because very often at the application level, it's not just one or two people who apply for a license. It's a group of people. And typically, there's anywhere between 4 and a dozen people. And, we all know what it's like with larger groups. It gets harder to make to get some consensus. So I think that's one of the things that can be a challenge as well.
Yeah, I think Mike hits a really interesting point about culture, though, because this is one of these few industries where the passion and the pride is throughout the organization. In fact, here at Tilt, I could say that, the folks that we have just working in the grow facilities have a tremendous amount of excitement, passion for what they do, the way they do it. So when you combine them with another company and then they have their own passion, their own ways of doing it, the fit doesn't always go as smoothly as you want. So when you try to do any kind of centralization, when you try to get any of those synergies that everyone who does M&A is always barking about, it becomes harder because you just have these silos of operation who are just kind of naturally wary of each other. So finding ones that are aligned, that understand why they're doing it, if you can start there, then what little you can centralize in cannabis, you can start to leverage that. But I do think culture it's a big one, I think, in this industry more than anything else. I've just seen so many folks who are just so dug in at even the most entry-level positions, which is a little bit upside down from what I'm used to seeing, where it's the top-line guys who are dug in and everybody else is kind of catching up. So,
yeah, I mean, my struggle has been scalability. The exciting thing, the reason I jumped ship and got into this industry was that it's a frontier business, and that in the operation side, there's a lot of times where there's no manual, there's no piece of equipment, there's nothing that gets you there. And so it's a series of independent inventions, very little standardization, very little industry standards that you could just look up existed a few years ago. And so now when you acquire an operation and it's operating at a certain level, well, part of your acquisition is always in line to take it to the next level, whatever the next level is of scale. But sometimes the systems, the techniques and the practices that they're involved are not scalable. And so you have an industry, a facility that's running at a certain level and is doing great. But if you try to turn it up, then you're essentially looking at a rebuild because their techniques, their systems weren't scalable. And that's the challenge that I see when you're looking at an acquisition of what I would consider an independent startup.
Very helpful, Robert. Thank you. And Kevin, let's go to you for a moment here on a similar topic, or I guess really an extension of that same topic. What are you seeing in terms of your clients that you're working with in the cannabis industry in terms of steps that they're taking in structuring deals to avoid or to alleviate or to facilitate addressing some of these post-acquisition challenges, including as to culture and other sorts of challenges?
Mm-hmm. Well, integrating two companies remains really one of the most difficult aspects of a deal. A lot of times buyers often underestimate the effort that's needed to truly merge these companies together and don't spend enough time planning the integration once the deal is done. This is true in the cannabis industry, really even more so, just given the laws state to state and federally it's still illegal. So buyers need to consider what they need to do, be ready for building out a timeline of milestones and business continuity and different long-term initiatives. But to answer your question, there's not necessarily a specific structure that we're seeing, but rather an approach, right? We're seeing clients who are acquiring entities that are looking to start the planning of post-acquisition integration earlier in the process, sometimes even during, as you move through the due diligence phase before the deal's completed. There's typically an overlap between the pre-deal synergy planning and actual execution once the deal's done. So it's important. And that's what we've seen, that management is now planning out the integration in a little bit more granular detail to be able to create value, off the bat. One area in particular that we see this approach is with really integration of technology, right? Whether it's seed to sale technology, and obviously each state has different requirements for that technology that's needed, but integrating, through that, or aligning on ERP systems or CRM systems or things like that are important to have integrated if you're able to, legally, based off of where your integrating into, but technology certainly a key area, and one that we're seeing approach where management's starting that process, planning it out a little bit earlier, which helps from a post-acquisition standpoint to make, for you to be able to see the value a little bit quicker in the deal.
Thanks, Kevin. Michael, I'd like to come back to you on that notion of applying for new licenses in emerging states, and that's worked well for you and for Body and Mind. Do you have any advice for people in the audience in terms of applying for new licenses in emerging states like New Jersey, New York, and these other very exciting emerging territories as to how they can improve their chances of actually getting success?
Yeah, I actually talked to a lot of people who are interested in applying for licenses, both in the states that you mentioned and some of the states that are looking, to move towards legalization. There's a real belief that there's ballot initiatives left, right, and center in states that are going to open new states, when the midterms come along. So we'll see how those progress. But, we talked about this a little earlier. The larger the group that you bring into your license application process, the more challenging it can be down the road. And typically, when you are applying for license, you need some areas of expertise. You're going to need some investors. And I can guarantee you that your license process is going to take you probably 2 to 4 times as long as you think it's going to. There's going to be delays in adjudicating licenses. There's going to be delays in results. There's probably going to be lawsuits if the state's just opening up for the first time. In some states, you actually have to have a lease on the real estate. So we've seen some states where licensees, with a fixed amount of money, have gone and leased a space for their store or for their cultivation facility. And then, the process took a lot longer, and then there was lawsuits, and all of a sudden they had banked on paying a lease for a year and a half, and it turns into 3 years, and they need to maintain that lease or their application's no good. So it's probably going to cost you a lot more than you think it's going to. Get the right people on the team, and as I think we've all spoken about, think about the end, think about the exit. How are you, if you build this up into a fantastic asset and you want to sell it, what happens there? What happens if that 5% owner doesn't want to sell, or the drag along rights considered? And you really do need to get professional advice on this. A long time ago when people were applying for licenses, it was so cooperative because cannabis was so new that when people were applying for licenses, they would call the other people that were applying for licenses and ask them questions about, what do you think of this? And it was really, almost co-opetition. Those days are gone now, but there's a lot more great advice that you can get from, various sources.
Michael, great comments there. And also as a law firm, I'll throw in that I think it's helpful to have a litigation perspective as well as a deal perspective when you're structuring these deals, because when you're doing a deal, I think the energy goes toward closing it, and really that's not the goal. I think just to close the deal, the goal is to have a very successful integration. That's the goal, right? And so having that litigation background and in your law firm and understanding the things that have gone wrong, having litigated those things, and then saying, wow, it would have been nice if the deal included this term or that term, and so on and so forth. So I think that sort of stuff is invaluable. And as we've seen the industry develop and all the things that have gone wrong, to be able to then say, okay, wow, there's so much to be learned here, and we can put things in this agreement to achieve a healthy integration 5 years out, as opposed to just trying to close the deal. I think that's a very valuable perspective. So thank you for that, Michael. And Gary, I'd like to come to you. Speaking on the topic again of acquisitions and growth by acquisition, some of our clients at Zuber Lawler prefer to acquire, some of our MSO clients prefer to acquire finely tuned machines. So they're already profitable or near profitable. They've got great executive talent, and they're pretty buttoned up in terms of their bookkeeping and those sorts of things. But a few of our clients, and I'm surprised at how few actually, I must say, are interested in distressed assets as well, and dealing with the burden, the extra burden, the additional challenges of acquiring distressed assets, because there are potentially windfalls underneath the surface of those distressed assets, particularly when you're dealing with MSOs that have that sort of executive talent and can fill in some of the gaps that are the cause of the distress at the acquisition's target. So what's your own perspective on that? Are you interested? Is Tilt interested in distressed assets? If you are, what are some of the additional challenges that you found in looking at distressed assets, and how have you met those challenges?
I mean, I think it only makes sense to look at the distress might be a strong word. I think I have a certain thought of what distressed is. 25 cents on the dollar. But I think generally speaking, the finely tuned ones, it's always nice to do that. I mean, I think that's every M&A person's dream is I'm going to find something that's so easy it integrates itself and I don't have to do anything. But the real value for shareholders is finding those assets that need a little bit of work. I think the challenge in this industry is the egos can be unbelievably outsized for the assets that are on the market. And then their view of the valuation. And then you start talking about the things we all mentioned earlier, how many people are involved, how many really want to sell, how many are just looking to get out, how many are worried about what their professional reputation looks like down the road. And trying to manage all those things while taking a look at the underlying assets. And if it's true, if you do have a good internal management team and you can integrate just about anything that comes down the pike, I think there's a lot of interesting things to do. And usually, the initial conversations are hard. It's always hard to tell someone that, their child might not be as good looking or their child might not be as athletic as they'd like them to be. But usually cooler heads prevail. And if you show them the data and then you show them a path forward that includes them being a part of it, you get a lot more cooperation. So I tend to like the scratch and dent. I think there's a lot more rational behavior now that make it manageable. It just takes a little bit longer, but I think it's better overall for our shareholders.
That's great. And I think we're coming up on time here, so I've got time for one more question. I'm going to make it open to the panel here. I'd like to talk about marketing in the context of growing companies across state lines, which are actually growing, of course, in I think the biggest sense is your brand or your brands, right? And so how does that work in the cannabis industry where federal prohibition takes most of the tools that you'd use to grow a brand, marketing tools, off the table? You can't put an ad on television and so on and so forth. So what creative ways are you meeting that challenge of growing a brand across state lines in the context of that federal prohibition, which puts such heavy strictures on how you can market the brand?
I'll start off, and I was laughing at Gary saying your child might not be as pretty as they think. I find myself often disappointing people with that same reality, but it really relates to brand. There is a difference between vertical states and non-vertical states. We operate in 2 vertical states, Florida and Texas, and quite frankly, brand awareness is not there because we're truly vertical. We grow it and sell it. So the customers buy fluent. When they go into the store, it's all fluent. There's ways, and the marketing and advertising rules in Florida are so strict that, with color schemes and otherwise, there's ways to slip in reference to another brand. But brand allegiance just isn't being built in those vertical states. This causes me to have several very disappointing conversations when I'm dealing with brands from out west, mainly California, and folks that have made $1 million or so on their brand name and they're really fond of it. I have to let them down and say, you just don't have that kind of following in Florida, and you're not going to have. And that's a disappointing conversation because they want to put so much value on their name and on their brand, and they're so proud of it, and they've invested so much in it. But brand allegiance does not follow from into vertical states. That's my one commentary on that point.
So Robert, picking up on that, and please jump in, anyone on the panel. How does the notion that prohibition someday will end affect things, right? Because I think an implication or an inference that could be drawn from what you had just said is you're almost just as well off starting a new brand. But then at the same time, if you're thinking 10 years out, right, then prohibition ends. I think within 10 years, if not well before then. And then you've got a bunch of different brands as opposed to a singular brand that you can market in the way that vacuum cleaners are marketed, for instance, across state lines. So does that change your thoughts at all in terms of the conversations that you have and the value that you placed on bringing a brand from here over to a new state? And are you focused on having a singular brands across multiple states as opposed to having different brands in each state?
I mean, that's kind of what the focus of our business plan is, right? Working with brand partners and finding those folks in California or Colorado or Washington State that have survived the hyper-competitive markets and bring them over. But I think what's key to that, and this sort of builds off what Robert was saying, you have to have a good brand architecture. If it's literally just a celebrity endorsement and it's price and potency, it's probably not going to play well, by itself on the East Coast or long term. You've got to have, what is that architecture? What is that lifestyle? What is it it's going towards? And that's what we try to fill out a grid in each of our markets to say, do we have products that fit each of those use cases and form factors? And if so, then the brand makes sense and let's run with it. If not, then we move on to the next.
That's great. And I'm getting the hook around the neck here. So Brent, good to see you. And I want to end by thanking the panelists. That was fantastic. Gary Santo over at Tilt, Kevin McLaughlin over at Centri Business, Robert Beasley at Cansortium, and of course, Michael Mills at Body and Mind. That was a fantastic discussion, and I learned something myself. So it was great having you, and thank you all for watching, and thanks especially to our friends at Benzinga. Always enjoy being here.
Thank you.
Thanks very much
for
Tom.
having us.
Thanks.
Really cool discussion, Tom. You've been a supporter of Benzinga team and the Benzinga dream for a while. I want to thank you, man. Thanks for the support.
I really appreciate it, Brent. Thank you.
Yes, sir. All right. Have a good day.